Can you hear me?
Morning, sir.
Morning. So you're welcome to Equity Professional. And welcome also to Advanced Audit and Assurance. My name is Adebayo Desan. I will be your facilitator for Advanced Audit and Assurance. Sorry. I'll be your facilitator for Advanced Audit and Assurance. Pardon my voice. I'm trying to clear my throat, okay? So in the meantime, it's going to get better. I hope you can hear me very well. So I'll be your facilitator for Advanced Audit and Assurance. You're welcome on board. I'm happy to meet with every one of us that is here today. We are starting with the first topic. Now, before we start, I hope you're all aware that ICAN syllabus has changed and it's going to be tested in this November diet. Okay? So some of the additions to the new syllabus included aspects of some revised international standard on auditing, that is the International Standard of Quality Management 1 and 2, that has gone to replace the ISQC number 1. Okay? Then there have also been new additions the uh, to the syllabus in the areas of sustainability report. All right. Before that, we were talking about social responsibility, but now the new name for it is ECG. Okay, environmental sustainability and governance. It has also been included. All right. Then some other aspect of IT also, AI, artificial intelligence, has also further been enhanced or improved upon in the syllabus. So what you need to understand now is that as the syllabus is now, there is no any area of concentration. That means that every aspect of the syllabus is very, very important. There is no AOC as far as this paper is concerned. Okay? So all you need to do is to understand all the topics you have in the new syllabus and be able, more importantly, for you to be able to um, understand and be able to answer questions in examination. Uh, the mandate, my own mandate for my own mandate for, to you is to ensure that you learn, okay, new things, then you unlearn all those outdated audit terminologies that you are conversant with. Some of them have become outdated, okay? And for you to be able to also, and for you to be able to learn new things, adapt to the new changes in the syllabus. And over time, throughout the class, we'll be have given us some tips on how to pass or how to demystify the almighty advanced audit and assurance. Because what I can see is that most students fail this paper, not because that they don't know it, but I believe is the way they go about answering the questions in the examination. All right. So without further ado, we are going to kickstart the class now. We're starting with the, we're starting with the first topic, which is the meaning of audit and assurance. Now, what you need to realize also in the course of this study is that the audit and assurance services is being regulated globally, right, by the International Audit and Assurance Standard Board, which is an arm of the International Federation of Accountants, IFAC. Okay? So it's being regulated globally by that for the International Auditing and Assurance Standard Board. Is the body that is responsible for the governance, putting in place governance, okay, guidelines for the practice of audit and assurance globally. And for this paper, for this chapter, they have provided us with the meaning of some of the terminologies that you'll be required to understand, okay, for you to gain mastery and be able to answer questions, should questions be set in this area for your exams. Okay, so we start. Now, I said that we're looking at the meaning of audit and assurance. First of all, let us define what audit is. What is audit? Now, audit, you need to understand that is a form of assurance engagement. What do I mean? I'm going to explain assurance engagement in a bit, but let's also understand what is an audit. Now, the audit we are looking at here, remember that there are two types of audit. We have internal audit, we have external audit. The one that pertains to us in this chapter, this particular chapter, is the external auditing, which is otherwise known as what? The statutory audit. Okay? So statutory audit is an audit that entails the independent examination of an expression of opinion, okay, on a set of financial statements of a business enterprise, okay, by an appointed auditor, within the terms and laws and regulations of that guides the appointment, and also in the performance of his assigned or statutory responsibility. That is what we mean by auditing. I take it again. Audit, right, is an independent examination of an expression of opinion, okay? Expression of opinion on a set of financial statement of a business enterprise that by an appointed auditor, okay? In line with the terms of appointment and also in line with the laws and regulations that guides the auditor in the performance of his assigned responsibilities. Now, what you also need to understand is that the essence of external auditing, okay, the essence of external auditing is to be able to provide assurance about the quality of information that is contained in the financial statements, okay? Because there are people that are going to rely on the financial statement. There are people that are going to rely on the what? Financial statements. Now, you have external people or stakeholders that are going to rely on the financial statement, and you have internal people that are going to rely on the what? On the financial statement. Okay? Now, what you need to realize is this. The more credible the information is in the financial statement, the better it is for those people that want to utilize that information for various investment decisions or for various strategic decisions. Okay? So the auditor has that responsibility to ensure that all the people that are going to rely on the information contained in the financial statement are not misled. All right? They are not what? They are not misled. So that is what audit is. That is statutory audit, or we call it external auditing. That is what it means. Is that clear? Does anybody have any question? Does anybody have any question?
No, sir.
Okay. Can I proceed? Can I proceed?
Yes.
Okay. I hope you are speaking the minds of every other person on the call. Okay. So that is for statutory audit. Let's go to assurance engagement. First of all, let's talk about assurance. What do you mean by assurance? Assurance is an English word, okay? And what it means is simply to provide comfort or to give confidence. To provide comfort or to give what? Confidence. Now, what does that mean? If somebody said that I give you the assurance that what I'm giving to you, what I'm telling you is the truth. What that is telling you is that what he's telling you is nothing but the truth. Okay? Now, what that person is also saying here is that he can stake his life on that information that he has provided. That is, he has telling you that he's telling you nothing but the absolute truth. Now, let's take it to advanced audit and assurance. Now, advanced audit and assurance, in advanced audit and assurance engagement is a type of engagement where a practitioner, remember when I was explaining the statutory audit, I don't make mention of practitioner, I use the word auditor. So if in exam, we are talking, they give you a question that relates to assurance engagement, and you are writing auditor, such students will be penalized because you are not using the right terminology in answering that question. So for assurance engagement, you don't use auditor. You use what? Practitioner. So the practitioner expresses a conclusion designed to enhance the degree of confidence of the intended users, okay, of intended users other than the responsible party about the outcome of the evaluation of measurement of a subject matter against criteria. Okay? Of subject matter against what? Against criteria. So let's break this down as we did for the statutory audits. Now, when you talk about practitioner, a practitioner is somebody that has vast experience in his field of study or in his line of endeavor or in his discipline. That is who a practitioner is. And that person may not necessarily be an auditor. That means that you have other people that you can call practitioners that are not necessarily auditors. Don't get me wrong and don't get it twisted. Auditors are also practitioners, okay? Auditors are also practitioners, but practitioners are not auditors because practitioners means somebody that has vast knowledge in a particular field or discipline. So auditor is also one of them, but the practitioner extend beyond the discipline of auditing. So examples of practitioners that we are referring to in advanced audit and assurance are lawyers, architects, surveyors, engineers, risk management consultants, IT consultants, gemnologist. Who is a gemnologist? Who can tell me who a gemnologist is? Have you come across that word before? Gemnologist. Is anybody in the house? Who can tell me who a gemnologist is? Mr. Moses. Who is a gemnologist? Mr. Michael. Who is a gemnologist?
Hi, good morning.
Good morning.
Okay, I'm just going to try a gemino. I think a gemnologist should be someone that specializes in precious stones, right?
You are very correct, sir. That is the answer. You are very correct. Somebody that can ascertain the worth of a precious stone is a gemologist. Okay? So you understand. Thank you for your answer, sir. So you understand who a practitioner is now. So you know, one of the things I see that why students fail audit is the fact that we tend to read this material as though we are reading novels or we are reading just to pass. And I'm telling you from experience that Of all the 15 papers you are going to write before you become qualified, regardless of where you start from, that is, when I say 15 papers, I mean those that started from foundation up through professional. You are writing 15 papers, right? One subject that is still going to be more relevant to you after you have qualified, take it or leave it, is advanced audit and assurance. All the others, some of them, if you don't find yourself in some specific industry, the utilization or the application of such knowledge will not be needed. SFM, for instance, if you are not in an investment bank, you don't work in a merchant bank, if you don't work in a consulting arm, where some of the knowledge you have gathered in SFM will be applicable. Whatever you have learned in ICAN might be the last time you are going to come across some of those terminologies or some of those topics that you have done in SFM. And that cut across every other subject too. So when you are reading Advanced Audit and Assurance, you must read it with the intention of understanding every word that is contained in that study material. If you cannot understand a term in the material, pause your reading, get to your internet, get the audit meaning. Because if you go and put it as English, if you just type English, let's say you try practitioner in your Google search or your Google search engine, you type practitioner there, it's going to give you what I've said in a different way. And if you go ahead and apply that in understanding or in answering questions that relates to auditing in examination, you will have missed the whole point. So anytime you are reading your study material and you find yourself stuck on a particular terminology that you don't understand, the best you can do for yourself is to pause, use the internet, search for that word as used in what? In auditing. If you are putting it, just say as used in what? In auditing and assurance. You'll see that by the time you click on send or enter, it's going to give you a whole different meaning that would have been different if we had used only the term assurance engagement or whatever you were trying to get the meaning from. I hope it's clear. So like I said, some of these tidbits or key points will be coming as the lecture progresses. Okay, it's going to continue till the end of the class. It's going to continue to the end of the class. Okay, so thank you for that. And thank you, Mr. Michael, for that beautiful answer. So you understand who a practitioner is now. So they are the people that are vast and experienced in some aspect of their discipline, in the aspect of the discipline that they have pursued. And it is expected that whatever information they are going to provide in line with that area or in that field is something that you can bank on. You can be rest assured, you can bank on, you can be confident about. So that anybody that is going to take that information that they are providing or they are provided can go to sleep, knowing fully well that there's no need to bother, no need to panic, because whatever information that has been provided is the authentic information. Hence the word degree of confidence of the intended users. Now, who are the intended users? The intended users are the people that are going to utilize whatever information these practitioners are going to provide in their report at the end of the engagement. We call them the intended users. Okay? Other example of intended users, you have the shareholders, general public, the banks, government, creditors, suppliers, and the likes. Okay? Other than the responsible party. So, excuse me. Okay, so like I was saying, so the responsible party is the person or the team that prepares or provides the information that the practitioner is going to work on to present a report. I take it again. The responsible party is that person or a team that will provide information in which the practitioner will utilize, right, to provide a report. That is what that is the responsible party. So in a nutshell, who are the responsible party? Simply put, the responsible party are the management, executive management, and the board of directors. They are the responsible party. Okay? They are the persons that are going to provide the information that the practitioner will work on. That's what we talk about the outcome of evaluation or measurement of a subject matter. That subject matter is that information that has been provided by the responsible party to the practitioner against criteria. So what is criteria? A criteria is a universally accepted means of measurement. A universally accepted or acceptable means of measurement. So for instance, a plot of land or an acre of land. In an acre of land, you have 6 plots, right? If you go to Russia, say you want to buy an acre in Russia, they're not going to sell 8 plots for you at an acre. They're going to sell for you 6 plots as an acre. You go to Saudi Arabia, say you want to buy an acre of land, they're going to sell for you 6 plots as an acre. They will not sell for you 7 plots as an acre. What am I trying to say? Anywhere you go in this part of the world is the same measuring kind, is the same measurement that is applicable. The same measurement is what is applicable. You understand? So that is that. So you understand the definition now. A practitioner expresses a conclusion designed to enhance the degree of intended users rather than a responsible party about the outcome of the evaluation or measurement of subject matter against criteria. Okay? So anytime you see subject matter, please do not limit it to only financial statements. Do not limit it to only what financial statements. Subject matter depends on the information that is requested for by the practitioner. If the practitioner is an auditor, yes, financial statements will be required. If the practitioner is a lawyer now, you are not going to present financial statements to a lawyer, right? If the practitioner is an IT consultant, he's not going to request for your financial statements. So you understand what I'm trying to say now. So the subject matter it depends on who the practitioner is. So please have that at the back of your mind. All right. Any question before we proceed? Any question, class? Okay. So, like I said, in assurance engagement, the practitioner is engaged by one party. So why is it engaged by one party? So what that implies is this. Because in audit, you have to be able to relate it to real life scenarios or real life situations. I believe every one of us know the richest man in Africa. And the richest man in Africa is Dangote. Is Dangote a chartered accountant? The answer is no. Is Dangote a finance expert? The answer is no. So who is Dangote? Alhaji Aliko Dangote is a business owner, is an investor. Okay? Is an investor, is a business promoter, right? So what that implies is that he needs the services of financial experts or finance experts. In the services of chartered accountants, in the services of what? Of lawyers, right? So when he set up his group of companies, he knew that he does not have the capacity in terms of what? Human capital on his own to do it. What did he do? He employed people, right? Now, upon employing those people, one thing that is in his mind is that How is he sure that the people that he has employed are actually working for him or they are working for their own selfish interest? Are those people working for him or they are working for their own selfish interest? How will he know? If you go and ask them, I hope you are working for me, the obvious answer is yes, we are working for you, always for you. But that is not enough to convince him, right? So what did he do? He will go and appoint an external auditor. The external auditor will now come and review the report that those people that have been employed to work for him, the management, they are going to present that report to the auditor. The auditor will now review the report and see if it aligns with the uh, objective of the business owner. Do you understand? That's what it means. So they are going to give an independent opinion because they are not answerable to the management. They are answerable to Alhaji Alinko Dangote. Okay? And what are they going to work on? They are not going to be going to prepare the financial statement. They are going to demand for the financial statement or request for the financial statement, which will be reviewed by them, examined by them, and they present a report that includes their opinion on whether the financial statement shows a what? A true and fair view of the what? Of the business. I hope that is clear. Now, in assurance engagement, there are certain characteristics that you need to look out for. There are attributes that must be present before you can call an engagement an assurance engagement. There are some attributes you need to look out for. We call this element of an assurance engagement. Element of an assurance engagement. There are 5 of them. Okay? There are 5 of them. And I'm going to coin a word for it. And the mnemonics. What do you understand by mnemonics? Mnemonics are the use of what? Rhymes. Okay? Use of abbreviations. Okay? Use of rhymes, reading, right? To make learning to be what? Easy. Okay? You use rhymes to make learning to be what? To be easy. And that is what they use at kindergarten classes, crunch, okay? So that to make the children to learn very fast. And that is why I'm using this. Because it's a that there are so many things you are going to commit to your memory in the course of this paper. And the easier it becomes for you to be able to what? To recall what you have learned, the better for you. And the most important thing for you is that it's going to facilitate your your passing the examination at the end of the day. So I have coined a mnemonics for this, and the mnemonics is represented by CREST. 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 Right? The C stands for what? Criteria. Criteria. Or we call it suitable criteria. Criteria, right? I've explained what criteria is. Criteria is a universally acceptable unit or means of what? Measurement. What has been universally accepted as what? A means of what? Measurement. Right? The R is the report. The report, or we call it assurance report. Now, that report, when you are doing an assurance engagement, if you call an engagement an assurance engagement, what that implies is that at the end of the day, you're ready to present or prepare a report that will enable the users of that information to take a decision. In your report, you must include a stand where you stand on. That is your opinion. You must have where you stand on or what you stand for. Is it yes or no? You cannot sit on the fence. You must take a stand. The financial statement have prepared in true and fair view. You say it's not, if it has not been prepared in a true and fair view, you have to say it. Okay? The next one is E. E is what? Evidence. Evidence is what? Your evidence should be what? Sufficient and appropriate. Your evidence should be what? Sufficient and what? Appropriate. What does that imply? That is, whatever you're going to use at the end of the day for your report, right? Whatever you're going to use at the end of the day, report is based on the evidence you have been able to gather is based on what? The evidence you'll be able to gather. And the evidence you're able to gather is in on the quality and quantity of the what? Evidence obtained. Okay? That is the E. The S is the subject matter. How did I define subject matter? Subject matter is any information that has been provided by the responsible party for the what? For the practitioner or to the practitioner. That is the subject matter. It's not limited to only financial statements. That's what I need you to know. All right? Then T. T is what? Three-party relationship. That is, in every assurance engagement, you must have three parties. You must have the practitioner. Who is the practitioner? The person that is carrying out, or the person that has been appointed to carry out a task. Okay? That is the practitioner. The sole party is usually the management. The intended users are people that are going to make use of the report that the practitioner presents. I hope that is clear. So that is the CREST. Criteria, reporting, evidence, subject matter, three-party relationship. Okay? Another thing you also need to note here is that we are talking about giving degree of confidence. What that implies is that in giving the degree of confidence, there are two levels to giving degree of confidence. Two levels, that is, your confidence level is of two types. It's either a reasonable level of assurance or a limited level of what? Assurance. Okay? Now, the degree of confidence, okay, will depend on two things. The amount of work performed in carrying out the assurance process and the result of that work. The amount of work performed in carrying out the assurance process and what? The result of the what? Of the work. That's going to lead to whether you're going to have a reasonable level of assurance or a limited level of what? Assurance. All right? Now, what do we mean by a reasonable level of assurance? The reasonable level of assurance is a type of assurance, right? That is provided by the practitioner's conclusion, expressed in a positive form. Okay? That is what? Expressed in a what? In a positive form. What does that imply? What that implied is that if a practitioner gets to an entity, to an organization, and he requested for A, B, C from the responsible party, and the responsible party decides to provide the practitioner with what? B, E, F. The practitioner decides to provide the responsible party decides to provide the practitioner with what? E, D, F as against A, B, C. In other terms, the practitioner requested for oranges. The responsible party gave hello, sir. Please mute your mic, sir. Mr. Okay. Do you understand what I'm saying now? So the person requested for oranges. The responsible party provided apples. And he said, I wanted oranges. Now he said, oranges are what? They are rounded shaped fruit. Apple also is a rounded shaped fruit. It's similar. You can use it. Okay? But if the practitioner requested for oranges and the practitioner was giving oranges, then that means that they have given the practitioner all the necessary information that he requires. All the information that he needs to be able to what? To form an opinion about the evaluation of what? Of the subject matter. Okay? Then you talk about what? Reasonable level of assurance. That's why we say that it's expressed in a what? In a positive form. What that implies is that he can defend that his report anywhere in the world before any person. He will not be afraid to defend it with his last blood in his body. because it's very sure, it's very certain that the information that was provided, that you requested for, was provided. On the other hand, in the limited level of assurance, right? What happens in the limited level of assurance is that the practitioner requested for similar thing, orange. He said, I wanted orange. Okay, we don't have orange, oh, we have apple. Both of them are rounded shape. Use apple in place of what? Orange. What that implies is that the practitioner requested for information, but all the information was not provided, unlike in the case of reasonable level of assurance. In limited, as the name implies, he was not provided all the information. What they gave to him are related information, which we call possible information. Possible, related information. That was what was provided to him, right? And because he did not get all the information required, what will he do? He's going to express a conclusion in a negative form. Now, when we talk about negative form, this is one area that most students miss it, right? In audit, some of the terminologies, they don't mean what is literally spelled out. For instance, in audit, I mean, in English, when something is negative, it's something that is very, very bad, right? If something is qualified in English, something that's very, very good. But the reverse is the case in auditing. The reverse is the case in auditing. Okay? In auditing, when they use the term negative in a negative form, what it means is that no other information, not all the information was provided. So the practitioner utilized only the information provided. So he cannot be too certain about what was provided because he requested for, he knows what he wanted, but they didn't give him all that he wanted. They only gave him something that is related to what he wanted. So he's going to base his opinion on what was provided. Hence, we use the word negative form. I hope you are getting it. Negative form. In another way, let me also put it another way. So negative form also means something like this. Now, in an organization, fraud has occurred in the organization. Okay? And the practitioner, they have appointed the practitioner to come and review the financial statement. Now, all the traces of fraud that occurred, they have taken it away. And they presented a clean report, a clean report. Everything that is devoid of that fraud was taken away and was presented to the practitioner. Upon completion of his engagement, he now said that there is no fraud in this organization. And somebody now stood up and said, yeah, fraud just happened last year or happened just 2 months ago. What do you think the practitioner will say? He will say that based on the information before me, there is no evidence to show that fraud had occurred. Why? Because all that would have indicated fraud had been taken away before his arrival. So it's going to give what? A negative report saying that nothing has come to my attention or I am not aware that a fraud occurred. Okay? So Mr. Moses, I'm with you, sir. Mr. Moses, ask your question, sir.
Okay. Thank you, sir, for this enlightenment. Can you use that same example to explain the first one, reasonable assurance? Like you
Okay.
use example of this fraud to explain this negative expression of or limited assurance.
Okay, thank you. So in the other one, right? Reasonable level of assurance. So let's do it this way. The same example now. Now, the auditor was invited, but all the information that related to that fraud were not hidden, were not taken away. They gave everything to him. Everything that he needed, it was provided. So they did not hide any information from him. All what he wanted was given to him. And when he finished, he now said that it's obvious now. He said that he detected that there was fraud or there had been fraud in this organization. You understand? So in that instance now, you see that if somebody said that, no, there is no fraud, it's going to say that based on what I have, I've seen traces, I've seen evidence that fraud occurred in this organization, and these are the ways you can guide against subsequent or future reoccurrence of that fraud. So that is the difference. Unlike in the case of limited level of assurance, that information was not provided. They hide that information, thinking that as the practitioner, he will use his wizard skills to dictate that fraud had occurred. The auditor is not a wizard. The practitioner, they are not wizard. They don't use magic. It's what you provide that is going to use to deal. Remember, I said that whatever you provide is the subject matter. And based on that subject matter, is going to give a conclusion. It's going to evaluate it and give a conclusion in the form of what? A report that contains what? An opinion. I hope that answers your question, Mr. Moses.
Thank you, sir.
All right. Any other question? Any other question? Kristana, any other question?
No question, sir.
Ishurame. Sorry if I murder your name, I'm sorry. Any question?
No, sir.
Mr. Kayode, Mr. Michael, any question?
No
We are
question.
good to go, right? Okay. So that is that about that, okay? We go to the next area. Now, I've explained what audit is to us, right? I've explained what audit is. So we just a continuation. We go to the next one. Audit-related services. Audit-related services. What are audit-related services? Audit-related services are engagement undertaken by an accountant or firm of accountants to perform such engagements as. Let me explain what this one means in a better form. Now, we talk about audit-related services. Audit-related services, they are opposites of what? Assurance engagement. Where those elements that we just explained now, where they are missing, where they are not founded, or where they cannot be found, right? What you have is not an assurance engagement. What you now have will now be referred to as an audit-related service. So what that implies is that where all those elements of assurance engagement are not present, the crest, when they are not present or when it is not present, right? What you have is what we call audit-related service. That is, it is close to assurance engagement, but it is not an assurance engagement. That's what it implies. So there are services, you can see, they didn't call it assurance engagement, they say they are engagements undertaken by an accountant or firm of accountants. Okay? So examples of these audit-related services are review of data, agreed upon procedures, or compilation. What do you mean by review of data? Now we talk about review. Review means that somebody must have done something. Somebody must have prepared a report. The responsible party, the management must have prepared their management report. Now, the audit firm or the accountant will just come and review. Review is different from audit. When they ask you to review something, what they ask you to do is that just do like a peripheral examination of that particular report. You are not expected to go very deep. You are not expected to dissipate much energy or much time doing it. Just for you to do a skeletal work or a sketchy work to ascertain that that thing has been done. That's what they mean by review. Okay? So a review provides a low or moderate level of assurance that the information under review is free from any material misstatement. The accountant opinion is usually expressed in a form of what? Negative assurance, which is an opinion that there is nothing obviously wrong in the information. For example, the opinion might be nothing has come to attention to suggest that information is materially what? Misstated. You know what I'm saying now? A review is not in-depth. So when they say you should go and review a report in an audit firm, it means that you should not spend much time there. But you that you go and audit that report, it means that you are going to spend extra time, extra hours. You must validate every information you have in that report when it's an audit. But in a review, your level of validation will be mild compared to when you are doing audit. I hope that is clear. That is why that in a review, you cannot give what? A reasonable level of assurance. Why? Because you are not doing an in-depth examination. Because you are not doing what? An in-depth examination. You're only doing what? A peripheral examination. You are just doing what? Limited evaluation. So that is why your opinion at the end of the day in a review will always be what? A negative assurance, because you are not going very deep. You're not going very detailed in it. All that is clear. The next one, agreed upon procedures. As the name implies, it means what? An engagement where the party or client hiring the accountant specify the procedures that should be followed by the accountant in performing the engagement. What that implies, from the word itself, agreed upon. Agreed upon means that two people will agree. Unlike in assurance engagement, you have three-party relationship: the petitioner, the responsible party, and intended users. In the case of agreed upon procedure, you have just two. You have the responsible party and you have the practitioner. I hope you understand. You have the responsible party, you have the practitioner. You don't have the intended users. Is that clear? Then you have the next one, compilation report. Now, a compilation report is a report where the accountant is engaged to prepare information for the client rather than audit or check the information prepared by the what? By someone else. So let me explain what that one means, because this one sounds very winding. So if you look at the assurance engagement, we said that the responsible party will prepare the report that the practitioner will review, will examine and write a report. In the case of compilation, is the reverse. The practitioner will be the one that will prepare the report that will be used, okay? That will be used by the what? By the responsible party. You will want to prepare the report, unlike the other one that the manager will want to prepare the report. In this instance, the practitioner will prepare the report on behalf of the what? Of the client. An example of this compilation report is the tax report or the liability report that the practitioner will prepare on behalf of the client. When they want to file tax returns, right? The practitioner prepares what? That schedule that's going to present on behalf, that's going to file on behalf of what? Of the client. That's the classical example of what? A compilation report. Okay? And in some other instances, another type of compilation report is that because he's not a staff of the organization, right? He will still need some input from the management. But at the end of the day, he will be the one to prepare that report on behalf of the management that will now submit on behalf of the management to the regulatory authorities or the relevant tax authorities. I hope that is clear. Any question? Are we on the same page?
Yes, sir.
Okay. Thank you. So I hope it's clear now. So when you are reading, one of the things I see with students, why they fail on it, like I said, is that we just read, we just cram and pour in exam, copy and paste. And one thing with audit is that the way it's going now is getting more technical every time. So you also need to be what? Ingenious. You need to be what? Ingenious in the way you read. You don't read just to, because that's one of the reasons why after you have spent like hours reading the material and you get up, all what you have read will just disappear. You just go black as but I spent 4 hours here and I cannot remember it. That is the reason. Because you are not reading with the intention of understanding. Like I've said it, like I've done it now. By the time you go back to read this thing, you're going to have a better understanding of how this topic is. And whenever you read it again, it's going to be more meaningful to you. You have some things to take away. You'll have spent what we call quality time reading it because you have a better understanding, you have a better approach to understanding each of the terms that are contained in this particular topic. And that's how it's going to go, it's going to be for every of the papers that you're going to write. I hope that is clear. So that's one of the areas you need to emulate going forward. Okay. Now we go to the next one. We have what we call what? Non-audit assurance engagement. Now, what are non-audit assurance engagement? As the name implies, non-assurance. That means what that implies is that you don't need to give what? A degree of confidence. Right? You don't need what? So what it means is this. Let me explain it in a better way. Now, non-assurance audit report means that it's a report, right? It's an assurance because it's not, they didn't say non-assurance, they didn't say non-assurance, they say non-audit assurance. So what that means is that you are going to provide some degree of confidence, but there is no law that compels any organization to engage in such activity. I take it again. This is an engagement that provides some level of confidence, okay, to the intended users, but there is no law that compels or mandates organizations to carry out these engagements. Like we call it what? Non-audit. I said audit is what? Statutory. That means it's backed by law and it must be done. The reason they say non-audit assurance engagement means that these are engagements that needs to be carried out, right? To provide degree of confidence to intended users, but it is not compulsory that every organization must carry out this audit. All that is clear. Examples are what we have here. Corporate social responsibility. Corporate social responsibility. What does that mean? So you see organizations in a bid to contribute or to give back to the society, what do? They will carry out some services. For instance, they can build hospitals, they can fix roads, they can give scholarship to indigent students, they can build schools, right? They can do all sorts of things. When you say that you must do it, the answer is no. But why organizations do it? Because they want to boost their what? Their reputation, and they want to boost their brand. That's an example of what we mean by non-audit assurance engagement. Another example is environmental policy. Now, in Lagos State, it's a crime for you to cut down the tree that is planted in your premises. You need to inform the Lagos State Environmental Protection Agency, LASEPA, before you can cut it down. When it happened to in the organization where I've worked before, they cut down the tree, right? And before you know it, before the tree came down, LASEPA visited the organization and said that, why did you cut this tree? Do you understand what I'm saying? Now, that's just an aspect of it. Now, environmental policy also says that you must not contaminate or desecrate the environment. You must not destroy the environment. Yes, the laws are there, but are they being followed? The answer is no. If they are being followed, there will not be what we call global warming. There will not be what we call global warming. There will not be increase in water levels. The ice we have in Antarctica will not be melting. The climatic condition or the climate will not be changing the way it's changing now. While I was much younger, while I was still growing up, while I was very, very small, rain starts March or sometimes February till November. We are in June. We are in June now, about to enter July. The rains are not it's not coming as expected compared to before. And deforestation is on the increase. That is why the Sahara Desert is closing in on us. Because if truly this thing had been monitored, I want to believe that all these things, global warming, will not have been existing as we speak. We can agree with me that there's what we call global warming now. Employment policy. Yes, there's labor that says that you should not work more than 8 hours. Yes, you must have gender, you must not be gender biased. You must give equal employment opportunity to everybody. If that's the case, why do we still have people that are physically challenged that are not gainfully employed? Even the people that are physically okay, physically fit, how many of them are gainfully employed? You understand what I'm saying now? So you understand what this one means. Non-financial performance indicator. These are things that doesn't have to do with finance, but they can have effect in the long run on the finance. For instance, if you work in an organization where there's high labor turnover, high iteration rate, that is, people leave the organization at will more frequently, you might say, yes, there's nothing wrong with the organization, but at the end of the day, it's going to affect the financial performance of the organization in the sense that in case where you have the finance department trooping in, trooping out, that means that at the end of the day, there will not be continuity in what? In reporting. There will not be consistency in financial reporting. Because when they're supposed to have passed some information across to you before you join, had left. So you're coming in there based on your what? Past experience, or based on some other information you're able to gather as you joined. When if you have somebody there that are going to put you through and say that, oh, these are the things that you need to include, you need to take this one out, you'll be able to present a more reliable financial statement. You know what I'm saying? So that's why I say that they are there. Yes, organizations do them, but there's no law that compels that if you don't do it, this is what's going to happen to you. Hence, we call it what? Non-audit assurance engagement. I hope that is clear. Any question? Any question?
No,
Any
sir.
comment? We are good, right?
Yes, boss.
All right. So we are going to chapter 2 now. We are going to chapter 2 now. Chapter 2 is what? Regulatory environment. Let's hold on. Okay, we go to chapter 2 now. Chapter 2 is about what? Regulatory environment. Chapter 2 is about what? Regulatory environment. What does this mean? Now, audit and assurance has been with us from time immemorial. And one of the reasons why it is still relevant to today is because of the fact that it's been able to adapt itself to the frequently changing regulations and legislations. So as the law change, or as the laws change, right, the audit and assurance profession also what? Change. Okay? They adapt easily. That is why if any other profession is going to phase out in a couple of years, I can bet you audit and assurance will still be here with us for a longer time. Because as the laws are changing, the ways we go about audit and assurance also what? Also change. And that's one of the reasons why we are saying that the laws, the regulations play a key role in the sustenance of the practice of audit and assurance globally. Last week or this week, it was this week, I think on Tuesday or Wednesday, the president assented to the tax reform bills, the 4 tax reform bills, right? What does that mean? What that means is that the way and manner we go about auditing, performing tax audit, performing other companies' audits, organizational audits, company, all of those things, there's going to be what? Some changes. And in the long run, audit will also what? Will also change along the line. Okay? So we are doing some other professions now. Once the law change, that's the end. That profession dies. But as the laws are changing, audit is also what? Changing. And that is what has sustained the practice over the years and even till years or till in future. Okay? Now, that's what we're looking at what? Regulatory environment. We are looking at how the laws have impacted on sustaining the practice of audit and assurance globally. Okay? So some of the things we need to know is this. There's need for us to know the need to regulate. Why do we need to regulate the audit and assurance services? Why do we regulate these services? Number one, because of what? Public interest. Now, what do you mean by public interest? The services rendered by the assurance provider, that is the auditors, right? They are not serving themselves. They are serving humanity. Assurance providers are serving what? Humanity. How do I mean? Imagine you have an investor that wants to come into Nigeria to invest in some big organizations. Regardless of whatever the business owners or the company's owners have done to woo or to entice the investor to come into Nigeria to come and invest, a clever, a shrewd business investor will not be taken away, will not be carried away by the whims and caprices of the business owner that wants to do business. What will he do? He's going to engage the services of what? The external auditors. That, oh, see, I want to invest in XYZ 1, 2, 3, 4, 5 companies in Nigeria. I want you to help me to carry out what? Carry out a due diligence on what? On their businesses. So whatever they have hidden from the business owner, by the time the external auditors or the audit firms get hold of the necessary information from these companies and they examine them, they're able to come up with what? Independent report that will enable the business owner either to invest or not to invest. Do you understand? So that's what we mean. So another area you also look at it, when, like now, banks, they are trying to meet up with what? Their recapitalization amount, right? Limit. What have they done? They are selling their shares to the what? To the public. What does that imply? Before any public will go and buy or subscribe to shares of any bank, a clever public or investing public, because they even said that before you invest, consult your auditors, your financial advisors. It is there in the advert. Don't be carried away by saying that, oh, they are making fantastic profits. There have been companies that made fantastic profits yesterday, that today they are nowhere to be found. They always say that consult your auditors, financial experts, and whoever before you subscribe. So the service that auditors or assurance and audit and assurance services they render is to the public, right? Is to the public. And that is why the report from them is usually what? Impartial. And they always have a professional view on issues that matter to users of financial or other information. Because that is only information or report that can be what? That can be trusted. That's why we call it what? The public interest. They are not protecting themselves. They are serving the public. Number 2 reason why you need to regulate the Audit and Assurance Service is what? Ethical regulation. Now, before you can practice as an auditor in Nigeria, external auditor in Nigeria, you must have, first of all, qualify by passing the ICAN examinations. Then you must work in an audit firm. You can call yourself what? An auditor. All of these things are what we call what? Ethics of the profession. For you to become a lawyer, even after you are graduated from the university, if you have not gone to the law school, you are not competent, you are not qualified to be called a lawyer. Because you have to go to the law school. Pass out from the law school before you can call yourself a lawyer. So that's the ethics of the profession. So ethically, it regulates that the law says that as ICAN, right? As an ICAN member, when you can become an ICAN member, first of all, you must have sat and passed the ICAN qualifying examinations. Then you must work in an audit firm where you can call yourself what? An external auditor. Before you can carry out what you call what? An audit and assurance what? Services. Do you understand? The third reason why you need to regulate audit and assurance service is because of what? Legal regulations. Now, different countries have different regulations. In Nigeria, our professional body, ICAN, was set up by an Act of Parliament, number 15 of 1965. Okay? And again, our Company and Other Matters Act has been revised in the year 2020. So the revised Companies and Other Matters Act 2020 is what gave rise to so many things that we'll be talking about much later. Okay? That has to do with what? How to practice audit and assurance in Nigeria. Then lastly, we have the what? Professional regulation. Now, professional regulation means that as auditors, you are expected to conduct your engagement in conformance with applicable professional standard. There are auditing standards that guide the performance of every audit. We have the ISA, International Standard on Auditing. We have the ISAE, International Standard in Assurance Engagement. We have the ISRE, International Standard on Review Engagement. We have the ISRS, International Standard on Related Services. We have the ISQM, International Standard on Quality Management. Now, all of these are to guide the auditors in the performance of their what? Audit engagement from time to time. So these are laws, these are regulations that makes the practice of audit and assurance to be what? To be sustainable over the years. I hope that is clear. Is everybody clear with the need to regulate the audit and assurance services? Is everybody cleared?
Very good, sir.
All right, thank you so much. So we go on to the next one. Harmonization of the accountancy and auditing profession. So, when I started in the introductory part, I said that the audit and assurance services is being regulated by a body known as what? International Auditing and Assurance Standard Board, right? And I said that International Auditing and Assurance Standard Board is part of the International Federation of Accountants, IFAC. And you know that IFAC, International Federation of Accountants, they are an arm of that body. They also regulate the accountancy profession or the accounting profession globally. That is the IASB, International Accounting Standard Board. Those are the ones that issue the IAS, National Accounting Standard, IFRS, National Financial Reporting Standards. Right? Now, both IASB, National Accounting Standard Board, and IAASB, National Audit and Assurance Standard Board, both of them, their roots can be traced to National Federation of Accountants. So the non-share, we can say they are brothers from the same mother. So because they are brothers from the same mother, why can't they fuse together? Why can't they join together to become one? That's the debate. Why can't auditors and accountants come together to become one? The reason is that it would have been much more possible, but different countries have different legislations that will not allow for both of them to merge to become what? One. They will not allow for both of them to harmonize, okay? To harmonize to become what? To become one. Because of what? The local legislations that exist in what? In other countries. Take for instance, Europe, they have adopted IFRS, right? You go to US and Canada, they don't have anything to do with IFRS. What they are using is what? US GAAP. United States generally accepted auditing or accounting practices. That's what they use there. They don't want to look at, what do we call it? IFRS. They are not adopting IFRS. Even though some of their principles may be similar, but they choose to follow that part of US GAAP. Do you understand? So that is the main reason why we cannot harmonize the accountancy and audit profession, because of what? Different legislations that exist in what? Other countries. Okay? So, and even in Nigeria, there are so many laws that we have, okay, that help to what? Solidify the practice of audit and assurance in Nigeria. We have the Companies and Others Act as amended. We have the Bank and Other Financial Institutions Act 2020 as amended. We have the Insurance Act 2015 as amended. We have the Mortgage Institution Decree of 1989. We have the Security and Exchange Commission regulations. We have the Nigerian Stock Exchange regulations. We have the Act of Parliament that set up ICAN, Central Bank of Nigeria regulations. We have the Nigerian Deposit Insurance Corporation. We have the National Insurance Commission regulation. We have the Nigerian Insurance Association regulation, and any other relevant regulation. I hope that is clear. Any question on that? Are we good to go?
So, sir, is this harmonization stuff like, though you said earlier that there's no part that is not examinable,
Yes.
but does it have anything to, is it related to standardization of international accounting standards too?
Didn't get that too. Sorry. Can you recap? Can you rephrase your question?
Like, what I mean is, you said there's no area that is not testable in this ICAN stuff.
Correct.
So I'm now asking that this harmonization now between accountants and auditors, is it related to the standardization of accounting standards too?
Of accounting standard. Now, accounting standard. So this is what it means. So when you're talking about accounting, right? You're talking about accounting. There's no you're going to talk about accounting, then you're not going to talk about auditing, and vice versa. So as you're making reference to accounting when you are doing auditing, when you're also doing auditing, you're going to make reference to accounting. So both regulations, we go with each of those professions. So you're talking about accounting now. You're not going to specifically talk about accounting. You're going to talk about accounting and auditing regulations. When you're talking about accounting, you're not going to talk about only auditing regulation. You're going to talk about auditing and accounting regulation. So both of them will always exist. Both of them will always coexist. None of them is going to give way to the other. I hope I answered your question. Mr. Moses.
Thank you, sir.
Any other question?
Please, sir, can you come again on why accountancy and auditing cannot be harmonized?
Now, I said again, okay, what I said is this. I said, if you go back to when I introduced this chapter, I said that the practice of audit and assurance globally is being regulated by a body known as what? International Auditing and Assurance Standard Board, which is part of the International Federation of Accountants. Right? Now, accountants, if you want to practice as an accountant, there are laws that also guide the practice of accounting, and the law that guides the practice of accounting is known as what? The body responsible for that is the International Accounting Standard Board, IASB. They are the one responsible for developing the IAS, National Accounting Standard, and IFRS, National Financial Reporting Standards. So, and this one also has its root in what? IFAC, that is IFAC batted IASB as well as IASB. Both of them were batted by IFAC, right? So what I'm saying is this. Since they are from the same root, from the same source, why can't we combine them to say, rather than calling accountants auditors, why can't you just have one name for all of them, for both of them? I said this is not practicable because the different laws that exist in different countries do not allow for the harmonization of these two professions. So they will always coexist, none will give way to the other. In Europe and Africa, for instance, we have all adopted IFRS. But in US and Canada, they are using what we call US GAAP. That's United States generally accepted accounting practices. Even though some of the standards in US GAAP, they are similar to IFRS, but they don't want to be associated with IFRS. And because of some of these issues that relates to differences in regulation is the reason why we cannot have an harmonized accounting and auditing profession. Am I able to answer your question, Madam Christina?
Yes, sir.
Madam Christina?
Thank you very much. Yes, sir. Thank you very much.
Okay. All right. Any other question? So we continue. We go to the next area. We're in chapter 2, professional standards. What do you mean by professional standards? Now, these are standards that guides the practice of audit and assurance. And I said that the body responsible for the pronouncement, development, publication of this auditing standard is the International Audit and Assurance Standards Board. They are the one that's responsible for issuing those international standard on auditing, national standard on assurance engagement, national standard on review engagement, national standard on quality engagement, national standard on related services, and the likes. Right? And I said that they are part of the International Federation of Accountants. So they are responsible for developing the auditing guidelines and standards. Now, what you need to realize is this. Before an auditing standard comes to publication, it goes through processes, right? So a draft, how do we end up having an auditing standard? So there will have been an outcry by some audit and assurance providers or assurance providers that while they were carrying out their assurance engagement, there had been a recurring issue that cut across boundaries, that cut across countries, and it's an issue that need to be dealt with. Hence, they will take the matter up with the International Audit and Assurance Standard Board. We have a burning issue. There's a genuine concern in this area. There's need for a standard to be developed to address this issue. So when the board, IASB, gets this information, what will they do? They will take it up develop it, and share that information that they have developed based on the complaints or the outcry of professionals, audit professionals or assurance providers, and send it to all the member countries that belong to the IASB, asking them for what? To provide an input or their input. Now, it's said that all countries of the world have one audit professional body or accounting professional body, one way or the other, in every country. So they will send it to every one of them, expecting them to what? To provide what? Their input. Now, when this information is presented to these member countries to send in their input or to express their interest or opinion, at that point is known as what? The exposure draft. That is when that information has been exposed to these member countries to what? To contribute. So after contribution, you'll give a deadline for submission. After every member country has contributed, they will work together as a committee, as a board, and fine-tune, harmonize all the views of the member countries. And they come up with what? A standard, an auditing standard, that will now be applicable to all the member countries of the world. You understand? That is how the auditing standard is or are developed. Now, that is the one that's cut across globally. Now, in Nigeria, we have our own standard, auditing standard, and it's called what? Nigerian Standard on Auditing, NSAs. Now, the Nigerian Standard on Auditing is developed by by Financial Reporting Council of Nigeria. Now, Financial Reporting Council of Nigeria, in conjunction with ICAN, they work together to develop the Nigerian Standard on Auditing. Okay? They work together to develop what? Nigerian Standard on Auditing. Now, what you need to note here is this. In the practice, let's say you are auditing your clients, and there's a conflict between which one should you adopt. Should you adopt the ISA, the National Standard on Auditing, or should you adopt the NSA? The law expects that you comply with the Nigerian Standard on Auditing. The law expects that you comply with what? The Nigerian Standard on Auditing. Later, you are going to make use of the National Standard Auditing is where you don't have a local auditing standard. Where a local auditing standard is non-existent, then you can adopt the International Standard on Auditing. But once there is a local standard on auditing or local auditing standard, and there's a conflict between the ISA and the NSA, the NSA will be adopted as against the ISA. Please note that. Is that clear? Is here, so that you don't say, why is this man saying this thing? This is it here. In this situation, there are a number of matters that will be considered. ISA is not designed to overrule local requirement. You understand now? So auditors should follow national requirement, not local requirement. However, as ISAs represent international best practice, countries are encouraged by IFAC to change their local and to change their national practice so that ISA can be followed. The only time you can use ISA is if there is no comparable guidance to the ISA in the country, then the real ISA practice can be adopted immediately. That is what I just explained. So I'm not saying this thing out of the blues. I'm saying it out of what? Out of what is documented, what is written. I hope we are clear. Any question? Any comments? Any observation? Are we good? Can I proceed? Okay. I will take your your silence to constitute acceptance. All right? So we continue. We go to the next area. Corporate governance. What are corporate governance? Now, this is a term that was made popular in the early 2000s. Okay? This term, corporate governance, became popular in the year 2000s after the Enron Corporation saga. Enron Corporation saga. Remember that case with Otto Anderson? It was what gave rise to what? Corporate governance. So what is corporate governance? Corporate governance is a system of rules, practices, and processes by which a company is directed and what? Controlled. In another way, the way and manner a company is being directed and controlled is known as what? Corporate governance. So what that implies is that when you talk about corporate governance, you're able to balance the interests of the company, okay, as well as what? The interests of various stakeholders in the organization, be it external, be it internal. Everybody's interest must be represented. That what we mean by what corporate governance. There should be balanced view. You should not take side with the owners at the expense of government. You not take side with the government at the expense of the owners and vice versa. Okay? So it's a foundation, okay, for attaining company's objective. Is a foundation to attaining the company's objective. Now, one thing that you must understand with corporate governance is that anytime you're talking about corporate governance, there must be a difference between ownership and management. So what that implies is that for one-man businesses, for partnership businesses, corporate governance is not compulsory. I take it again. For sole proprietorship and partnership businesses, corporate governance is not compulsory. As the name implies, corporate. That means that it's for what? It's for companies. And you agree with me that both sole proprietorship and partnership, they are not companies. Right? So, what that not to say that they cannot embrace corporate governance. They can embrace it. But corporate governance is strictly for what? For companies. And there must be clear distinction between ownership and management. That is, people that own the company, not the people that manage the company. Owners of the company are the shareholders. The management belongs to the board of directors and the executive management. That should be very, very clear. All right? So the directors and the executive management, they are employed and they work for the owners of the business. Okay? And they are expected to make decisions on behalf of the owners of the business that is of the best interest of the shareholders and not for themselves. And at the end of the day, they are expected to be made accountable to the shareholders. They should be made accountable to the what? To the shareholders. Okay? I hope it's clear. So that is what corporate governance means. Any question before we proceed? Is there any question? So let's continue. Please always respond so that I will know that we are together or that you can hear me. Communication is not complete when there is no feedback, please. Is there any question from anybody? I want to believe that every one of us can hear me. Okay. Mr. Moon, you want to say something?
No, I said for now, no questions, sir.
All right. So let's continue. So let's look at the importance of corporate governance. Is it good for companies to adopt corporate governance? Let's look at the importance. Number one, it helps to streamline the processes and gives people accountability. What does that mean? Anywhere you have corporate governance, you need not to be told what to be done. Because as you join the organization, we'll have given you your JD and your KPI. They are giving you your what? Broad description and your key performance indicators. They are giving you your what? Your job descriptions and your key performance indicators. So whether somebody monitors you or not, you know what to do based on what, because you know that anywhere you have KPI, that means at the end of the day, somebody will measure your performance. So you need not to be spoon-fed or to be handheld to carry out your daily task. So what that implies is that it makes people to be what? Very responsible and accountable for their actions. I hope that is clear. That is for the first one. The second one, it lowers risk. Now, anywhere you have corporate governance, what it does is that it allows for issues to be detected at the very early stages. Issues can be detected, challenges can be detected at the early stages. So you don't need to until when the thing is blown out of proportion before everybody gets to know. Everybody gets to know as the thing is evolving. As it's coming up, people will get to know. So people can tackle it head on before it is blown out of what? Proportion. Okay? So what that implies is, so in case there are, for instance, let me give an instance. So there was a time we had a Shining Bank in Nigeria, right? For those of us that still remember. Now in Shining Bank was owned by the Ibu family. And the chief executive officer, the managing director of Shining Bank that time was Chief Cecilia Ibu, right? Now, the internal auditors of the bank, they carry out their normal internal audit. And internal audit also entails risk management. And they detected some issues which were covered in their internal audit report that was sent to the management. But the management debunked those issues contained in the report. They never acted on those issues. Lo and behold, months after, the issue became a scandal. Okay, it became what? A scandal. Such that Asset Management Corporation of Nigeria had to step in and take over the management of that bank from the Ibu family. Now, the Shining Bank has been absorbed or acquired by Eco Transnational, the owner of Eco Bank. So it's part of Eco Bank now. What does that imply? If the management had risen up to attack or to deal decisively with those risks that were earlier detected by the internal auditors of that bank, possibly Oceanic Bank will still be standing as of today. And guess what again? During this recapitalization of these banks we have in Nigeria, 2 or 3 banks are going to merge together again. I don't know which of the banks, but some of the banks cannot meet up with the new recapitalization amount or limit. So they are going to be forced to merge if they don't want to go out of business. So what do you understand by that? That means when you have corporate governance, it allows for issues to be earlier detected and be dealt with. Okay? So that's why it lowers what? Risk. Number 3, public acceptance. Now, any business that has embraced corporate governance, right? That business is like a house that has been built on top of an hill. I take it again. any business, organization, any company that has embraced corporate governance will now be like a house that has been built on a hill which cannot be hidden. It is there for everybody to see. Or, in another way, it's like a house that is built with glass. That is very transparent. Everybody can see what is happening inside. So you cannot hide. You cannot be engaged in malpractices. When you are expected, you are being seen. Every action is being monitored by all the stakeholders. Not only the regulators now, all the stakeholders. So, and because of this, the public has embraced, the public will embrace any organization that decides to be transparent with their what? With their affairs and what? Activities. Okay? The public will what? We embrace any company that has decided to make its activities to be what? To be public. And that is why they are going to develop what? Some level of trust with such organization. They can invest in such organization, knowing fully well that their money or their investment is safe. Because they can see what they are doing with their money. Their audited financial statement is always published in their on the website. If you have any issue, go there and see the performance of the organization. You can ask questions. That's the beauty of what? Corporate governance. Another importance of corporate governance is that corporate governance helps to build a positive image for the organization. Everybody wants to be attracted to the organization. If you watch on CNN, you see that Zenith Bank and Dangote Group, they advertise on CNN. Why? Because they are saying that they have embraced what? Corporate governance. So you know that CNN is seen in many countries of the world. It's being watched for many countries of the world. So as they are, you know how much they are being paid for, they pay as adverts, able to showcase their businesses within split of minutes on the CNN. It's not small money. They are paying in dollars, advertisement costs in dollars. But they know what they are going to benefit. So before you can come out to say that, yes, we are an African, we're a Nigerian business that has a global touch. So what that implies is that everybody will want to invest. And that's one of the reasons why Dangote Group is not only limited to Nigeria, but across the whole of Africa. If I'm not mistaken, Dangote Group can be found in about 8 to 9 countries in Africa. Do you understand what I'm saying? That is one of the things that is making it possible. It attracts investment because of the what? Because of the reputation it's going to give to that organization. Okay? So they cannot afford to fail. They cannot afford to do something that is inimical, something that's going to affect the business. Okay? So these are some of the importance of what? Corporate governance. It's not exhaustive. You can still get more on your own when you do your own personal study, right? Well, these are some of the germane importance of what? Corporate governance. Any question? Any comment?
Hello, sir. Thank you very much, sir, for this section of the topic. I have a question. And so the question is like this. In your own opinion,
yes, sir.
if you were to examine a company, what are maybe 3 key things that will give you that comfort that yes, they have a good corporate governance?
Thank you very much. We are going to talk about it now. That is where we are going to. It's good you ask this question. I'll tell you now. Now, for you to say that a company has a good corporate governance or they have embraced corporate governance, 3 things are very important, like you said. Number 1, you look at the what? You look at the crop of board of directors. Who are the board of directors? Who are the executive management of that company? Are those people, are they free from corporate scandals? Are they free from fraudulent activities? We do a background check on any one of them. Has it been found wanting in any way with maladministration or misappropriation of funds? That's one of the things you need to look out for. Okay, that is the directors, the board of directors and the executive management. That's number one. Number two, you need to look at whether they have what? A sound internal control system. Internal control over financial reporting is very key. What does that mean? That means that the internal control system is so efficient such that it cannot allow for the financial reporting to be what? To be misleading. What does that mean? What does that imply? So you have a financial statement now. You want to be a financial statement. For you can prepare a financial statement, the bedrock of any financial statement is the internal control system. How do I mean? So you want to procure an asset for the organization. And that asset, you do not have a structure in the organization for approval. Who approves the what? The procurement of that asset. There's nothing like that. There's no approval metrics. Right? Number two, after they have procured the asset, the documentation was not provided. So you bought an asset worth over 100 million naira. We don't have any document. Part of the installation cost, everything will go on to like 400,000 naira. I'm just giving a hypothetical example, right? But what they have put in the financial statements when they are preparing it is the invoice value of that asset, 200,000 naira. What have they done? They have undervalued the asset in the books or in their books. Okay. Number three, a company that says they have embraced corporate governance, they must have an audit committee. They must have what? The audit committee. What that implies is that they must have a committee that is made up of part of the non-executive directors and what? And the shareholders. Do you understand? So these are some of the things you need to look out for. These are some of the things you need to look out for. So when you take an organization as a whole, the first you need to go and look at that is obvious to you. The one that's very obvious to you is the crop of the management team and the board of directors. Do you understand? So if you have a board, look at what is happening in First Bank now, the First Holding Co. First Bank name has changed to what? They have a parent company known as what? First Hold Co. Right? I think it's First Hold Co. What does that imply? Who is the head of First Hold Co now? Otedola. Right? Femi Otedola is the head. I just read some couple of days back now that he wants to buy out Oba Otudeko and other directors, other shareholders. So he wants to become the largest shareholder of First Holdco. That will now further substantiate him as the chairman of First Holdco. Has Femi Otedola been linked to any fraud in Nigeria? Mr. Kayode, have you heard that Femi Otedola has been involved in any fraud in Nigeria?
None.
Anybody in the house? Have you heard that Femi Otedola has been involved in any fraud in Nigeria?
No, sir.
So, and that is why he's doing all he can do to become the chairman or to remain the chairman and to be the only one that has the largest shares in First Holdco. And one thing you also saw in the course of this year is that he's planning of building a stratosphere. A stratosphere is a building with so many floors at Eco Atlantic. I hope you all saw it, right? Eco Atlantic is building up a stratosphere in Eco Atlantic. Stratosphere is a building that has many floors. Might not be as high as Burj Khalifa, might not be as high as Empire State Building, but it's going to be bigger and taller than the tallest building in Nigeria. Do you understand what I'm saying? I hope I'm able to answer your question, Mr. Kayode.
Yes, sir. Very insightful. Very insightful. Thank you very much.
All right. So we go on. So we are now looking at, so when you talk about corporate governance, there are three things you need to look out for. We have three people, three main actors. You look out for the directors, you look out for the executive management, you look out for the auditors. Who are the auditors? External auditors. Right? Fortunately or unfortunately for Nigeria, there is no audit firm in Nigeria that has been found wanting or that has been adjudged to have been involved in fraud in Nigeria or collapse of any company in Nigeria. There's no law, there's no judgment that has criminalized any audit firm in Nigeria. There's no law. You understand what I'm saying? There's no law. So that means that all the audit firms you have in Nigeria, they are still good, right? Then I've explained the board of directors and the management. So if you look at any company and you see, for instance, you see a company, sorry, I'm not a politician, but I'm just using this one now. You see a company that has Godwin Emefiele as a board of director now. Will you be willing to invest in that company? Your guess is as good as mine. You understand what I'm trying to say now? Why am I saying this? It's already in the open. I'm not the one that is saying it. I'm not the one that decided on this matter. The case is still in Abuja. Yeah, it's still in the court, right? That's for you to understand. So, the directors, what are their responsibilities? Directors and the board of and the management, they are responsible for the preparation of financial statements. It's their responsibility, not the responsibility of the auditors. Number two, they are responsible for setting in place or putting in place sound internal control system. Number three, they are responsible for providing the auditors with this information. Number one, they need to give external auditors access to information relevant to the preparation of financial statements. Two, they need to give additional information relevant to the audit. If there's any information that will help the auditor to carry out a successful audit, they need to make that information available. That's when we talk about reasonable level of assurance. Number three, they need to give unrestricted access to persons responsible for preparation of financial statement. Anywhere that is responsible for the preparation of financial statement, the auditor should have unrestricted access to such people. Then they need to also provide the auditor with authority representation. That is, where there are issues, where the internal control system is weak, you need to tell the auditors, yes, our internal control system is what is weak. They must admit to the fact that they have a weak internal control system. Okay? So I think they need to do. Now, the auditor's responsibility is to examine the financial statement and ensure that the information on the financial statement, first of all, the information is accurate, and to ensure that the directors and the executive management, they perform their duties as spelled out in the Code of Corporate Governance. Okay? As spelled out in the Code of what? Corporate Governance. Okay? Now, in Nigeria, corporate governance has been in existence, okay, as far back as 2003, by the Nigerian Security Exchange Commission, which is now the NGX, okay? It's now NGX, right? They are the one that first of all issued the first set of corporate governance. After that, they also issued another one in 2011. Okay? But the one that is prominent before every one of us that we all are aware of was the one that was developed in 2005, 2006 under the CBN governor, that is now the incumbent governor of Anambra State, Professor Charles Soludo, was the one that developed the corporate governance for banks in Nigeria. Before his emergence as the governor of Central Bank, we had 89 banks operating in Nigeria. And when he came on board, he said that all these 89 banks, none of them is big enough to take up what? Risk. Big business. What did he do? He asked for all the banks to be what? To be consolidated. So after the consolidation, 89 banks were merged to come up with what? 15 banks. Then in 2005, 2006. Okay? The number has dropped now. It is about 13 now. We have some other banks that are joining, right? So that is the history of what? The corporate governance in Nigeria. Sometimes in 2016 also, during the Buhari regime, the code of corporate governance for public sector, private sector, and the non-governmental organization was also developed, but it did not see the light of the day because, especially the one that has to do with the non-governmental organization, okay? The one that said that all churches must start to pay taxes, all churches, they should set up a governing council, that the GO is not the owner of the church. All of these things happened that time. And that's one of the reasons that led to the suspension of that code of corporate governance for NGOs, non-governmental organizations there, right? But a new one came shortly after, I think in 2018 or so. They amended that code of corporate governance and is in operation now, all right? So that is the historical perspective to corporate governance, all right? Now, the next area we want to look at now is one that has to do with what? Audit committee. Audit committee. The audit committee is a committee that is made up of what? Non-executive directors and the shareholders, right? So, as stated here, section 404, subsection 2 of CAN 2020 as amended, says that auditor shall, in the case of a public company, make a report to an audit committee which shall be established by the what? By the company, public company. Now, section 404, subsection 3, specifies that the membership of the committee shall consist of 5, comprising of 3 members and 2 non-executive directors. Okay? The members of the audit committee are not entitled to remuneration, but are subject to what? Election annually. All right? I hope you can see. I hope you can see. Okay. So that is what? The audit committee. I've talked about the composition of the audit committee. So companies by law, once you say you want to institute corporate governance, you must have what? Audit committee. And remember, Mr. Kayode asked a question. How do you know whether a company, how do you measure whether a company complies with corporate governance? And I made mention of audit committee. You can understand now that it is backed by law. All right? So the class, we are going to suspend it here. We have used 2 hours, right? I cannot exceed 2 hours. So I'm going to take it off from here next class. Does anyone have any question? Any comment? Any observation before we call it a day for today? Any question, comment, observation? Question, comment, observation from anybody? Mr. Moses, Madam Christiana.
Hello, sir.
Yes, I'm with you, sir.
Okay, so thank you. I dialed in late. I mean, a bit late, and
Yeah.
so maybe you would have addressed this. I mean, you are using the materials. I don't know if the materials are accessible, and how do we get it so that we can sort of catch up. I believe there are a couple of other lecturers aside from you taking this course as well. So it would be nice if we can have a group where these materials are shared and informations are shared around lecture time, if there is a reschedule, for example. Thank you.
All right, thank you, Mr. Kayode. Now, so what's happened is that the management is working on the creating a WhatsApp platform, okay, that we comprise of all the students that have shown interest, that are committed, okay, that have made commitment. Every one of us, every one of you here will be enrolled, will be enlisted on that platform. So subsequently, communication about classes will be sent to that platform. And in case you have any questions, comment, observation, even if you cannot, if you not cut across, or if you not cross your mind while the class was on, maybe subsequently you now thought of it. Maybe it was an afterthought, right? You can get back. You can always put it on that platform so everybody will benefit. You understand? So that is that. So based on the timetable, the lecture, we also have another one tomorrow. I think that one tomorrow is between, you see, I think you have the timetable, right?
So
I
I
think
was
it's
even going to
between,
ask question about the timetable because
yes,
it's only one.
I'm with you, sir.
Yes, the timetable. Okay, on Saturday is 10
Saturday
to
and Sunday,
12.
yes.
Okay.
Sunday is what time?
11 to 1.
So I have to tell you that it's 2 times in a week, right? All right. Any other question? I hope I've answered your question, Mr. Kayode and Mr. Moses.
Yes, sir. So the material for this class now till after the groups is shared before we have access to this material. That's what you're saying.
Exactly, sir.
Okay.
But I'll discuss with the management. If there's another way we can, if there's alternative way we can share the material with you. The material is ready. That's the material we're using.
Thank you very much, sir.
All right. Thank you. Mr. My sorry, I'm wondering your
Yes,
name.
sir.
Am I pronouncing your name correctly?
You are trying, sir.
Any questions, sir?
No, no question, sir.
Okay. Madam Christina, any question?
No question, sir. Thank you.
Mr. Michael, any question?
No questions, sir. Thank you.
So we are good. All right. Thank you so much for your time. Enjoy the rest of the weekend. Bye for now.
Thank you, sir.